Hello, friends. Again, I'm back with one more topic onto the domain of microfinancing. And in this, we are trying to see something on how we access this concept of microfinancing, how a person who belongs to a vulnerable community can reach out to these agencies, or reverse of it, how these players, these companies, these institutions who are called as microfinancing institutions, they are able to penetrate into certain areas where traditional banking system is unable to reach. Okay, let's go into this in detail. You see, access to microfinance means what? Access to resources in terms of credit, in terms of training, in terms of capital requirement, whatever you need, you should be given it. Second thing is, like, we need to create groups. You see, individually, sometimes when you go into trouble, you may not be able to sustain, but when you are working in a group, it is always possible that you are able to absorb bigger shocks, and one person's loss can be compensated by a second person's profit. So through groups, risk is going to come down, whereas rewards are going to be grow up. Okay, so we need to develop this concept of group working, and then self-help groups, and then we need to connect them to NGOs so that they do get regular support, whatever they want, financial or maybe some technical or some advisory things that they need for their sustainability or for their upliftment, that is supposed to be given to them. And then not only this, we need to go into accumulation of social capital. You see, social capital means people who are involved in this entire process, they are humans, and you see, they are going to be going to contribute for your national GDP. Once your people are trained, they are skilled enough, they are able to have their own sustainability, they are able to earn something for themselves, they are generating employment for others, is going to be an asset to your country. Okay, and finally, it is reduction in the vulnerability of private borrowings. Private borrowings, when I'm saying, I'm speaking something in line to sahukars and money lenders who are very, very exploitative in their business practices. So when you bring in a formal structure here through microfinancing institutions, it will be a substitute to the existing systems, and maybe it will bring down the number of deaths which are happening in this vulnerable community. Let's say people commit suicide because they are not able to repay their debts, so it is because of high rate of interest. So let's shift from Sauka model to something called as microfinancing model. This is somewhat better, but my expectation is, like, in future we'll be able to bring these MFIs at par with banks where lending rates are very, very competitive. Okay, so you see, when we do have an access to microfinance, what is going to happen is increase in income is going to happen. When increase in income will happen, you are getting more income, you are getting more sources of income, not one. So you see, you start thinking of some sort of savings. Now saving means this is for future. You may come across any emergency on a future date, but if you don't have resources, it will be tough for you to survive that time. So saving will help you to build up a pool of reserves for emergency situation. And you see, simultaneously, loan repayments, let's say you're getting more income and you have taken some couple of loans, so you see, you'll be able to clear those loans on time without much of delay. Okay, now further, if you go into the benefits of microfinancing initiatives and the benefits to poor people, is like they people will get independence. Independence in the sense like their dependence on existing government system like ration shops for getting very essential thing in certain limited quantities will come down. You see, when you start earning and this earning is very good, you don't need to rely on government schemes. You need not to volunteer for a subsidy and subsidized programs. Your earning is supposed to be good enough for a respectable life. Okay, now better decision making. Why? Because when you start earning, you see, I'll give you an example. Let's go to a class, students are taught something theory. Okay, if you bring in the element of practical into your class, things will change drastically. Let's say in every lecture, if teacher is having some cash reward for some of the logical and reasoning based answers from your students, don't you think everyone in class will be able to participate? And students are participating because they can see the element of reward clearly. Now here decision making will improve. Why? Because when you're making a perfect decision with lots of thinking behind it, you there is very less chance that you will go into losses or you will go into an extreme situation. So rational decision making will come in when you see something is improving in your life. So yani your business models are sustainable. and you'll try to take risk later, little bit later, because this is a vulnerable community. They don't understand any their future. They don't have any future expectation. So you need to first relax them, and then you have to show them what can be done for their improvement, what future opportunities do they have, and then you have to help them cutting down their wasteful expenditures. One is like they don't have many wasteful expenditures, but still, like let's say I have to do a marriage for my daughter, I can go to a court and get it done. Second is like I have to throw a lavish party onto all my colleagues and people who are residing in my neighborhood. So that is what is wasteful, I consider, when you don't have regular sources and you're depending on someone outside. So in such cases, it is actually considered to be a wasteful expenditure. So why not we first save something and then spend it later? Okay, so this is a rationale behind microfinancing initiatives. And you see, ultimately it is going to have something improvement in our overall ecosystem. Like education will be going to be there for their kids. Let's say I'm a person who is into this community, I was not able to study, I was not able to think better, so I have very limited options, but I would like to have my son admitted into a school or college if I do have some income. So I'm giving them that some income, a source of income, and then they will utilize it for their future generation. Now you see, this will improve their health structure too. So when you have proper diet, nutrition, everything as per the requirement, you see, health parameter will improve for your overall population. So not only this, people will start investing in various assets, asset acquisition rate will grow, investments will grow, and you see, ultimately it is your economy who is going to get benefited out of it. And there are so many choices which are available to them, and it is actually through collective decisions. Why? Because you are operating in a group, not individually. Here you can see what Indian government has done in past in terms of supporting or fostering this entrepreneurship culture in India. So under Mudra loan scheme, there is a concept called as Shishu loans. Shishu means a minor. Okay, small business loans. So you can see all three categories. Shishu is loan up to 50,000. Kishore is loan up to 50 to 5 lakh rupee. Tarun is between 5 lakhs to 10 lakh. So Tarun is for senior category. Kishore is for medium category. Shishu is just the introductory category. And if you see in financial year 17, 18 and 19, Sky Blue, which actually is a reflection of Shishu, yani loan to freshers, is the biggest proportion of all three, all across all 3 years. And this value goes in crores and crores rupee. Okay, so this is huge amount and support by government of India for these initial projects where people, they are starting it afresh, they don't have much of background, their financial requirements are less, and the maximum proportion of loan is granted in this scheme called as Shishu. So you see, government has shown you their commitment, their inclination towards this. And when you look at microfinancing, if you closely observe, what you'll find is like they do have a client centric approach. What is your client's expectation? What is your client's competence? What is your client existing geographic location? They all are center stage. An institution has to move to that particular area for service delivery. So it not only improves financial inclusion, social empowerment, and it also eliminates this element of poverty, will bring balance. Now you see, this is mainly a doorstep service where service provider has to reach out to them into these areas, which are far-flung areas, usually uncovered or unbanked areas. And the entire purpose is to help them support some revenue generation activities. Thank you for watching it. Good day.